Hello listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. In this week's pod, we turn our attention to a key power cable linking the UK market with the Netherlands. How have post-Brexit trading arrangements impacted flows on the interconnector, and what's the outlook going forward? How has the electricity link contributed to energy security in Northwest Europe? Has it lowered the energy dependency on countries such as Russia? Helping me, Richard Sverrisson, to talk about these issues and much, much more are Nils, Teipel, Commercial Operations Manager at BritNed, and Daniel Homoki-Farkas, Managing Director at Supercharge. A warm welcome to you both, gentlemen.
Thank you very much.
It's nice to be here.
I want to start, Nils, so maybe I'll direct these questions at you to start off with. Talk a little bit about post-Brexit energy trading arrangements and the general regulatory environment. Did the energy system or the energy markets get a no-deal Brexit, and what does that actually mean in practice?
That might sound a bit harsh, but I think, yes, that's the case. I think in the end, with the dropout of the internal energy market for the UK and therefore the dropout of the single day-ahead coupling, it feels a bit at least like a no-deal Brexit on the energy side. I think we've been, of course, also kind of dropped out of the developments of the further integration of the XBIT markets, so the intraday implicit markets. And since then, the progress on especially the short-term trading arrangement has been very limited.
Has that increased costs?
I think it has been increased costs for the consumer. I think what we, of course, see less price convergence between the countries, therefore higher energy prices and also flows against price differential. For the interconnectors as such, it has not necessarily increase the cost. So,
what are the current trading arrangements? I mean, you mentioned XBIT, the day ahead and intraday market coupling. The UK is not part of that.
Up until Brexit, all the interconnectors that were present to that time had been part of the single day ahead coupling, so the European coupling, and a couple of the continental ones had already joined the XBIT intraday arrangements. And then when Brexit came around the corner, basically we were moved back approximately 10 years, and we kind of had to revert back to day-ahead explicit trading. So since then, every border to the UK has its own day-ahead explicit auction setup. Different timings of the auctions are used. Therefore, there's much less harmonization across the auction setups. And the same applies to intraday. So every interconnector runs now a different intraday trading setup, selling different blocks of the day at different times in the day. So again, the harmonization or the kind of alignment between the borders is not a given anymore. It is a bit complex, and I think it's especially a lot more complex for the parties that are trading on it, because they kind of need to keep all these arrangements basically in check and kind of work with it. So I think where it kind of makes sense perhaps on the long-term products to give a bit more freedom and actually allow for a different trading setup and different products, I think on the day at an intraday market, it would be actually needed to, get things a bit better together again and actually harmonize it a bit more to the European setup.
Is there any way that the UK can join those continental market setup?
In the Trading Cooperation Agreement between the UK and the EU, there is an article in there, or multiple articles, that foresee the setup of a multi-regional loose volume coupling. So a new implicit setup with the UK. But so far, it has not been moved a lot forward. There's a lot of unclarities around how this should work. And I think also there's a lot of concerns that how this multi-regional loose volume coupling should really work with a single day ahead coupling on the European side, which is well established and actually working perfectly well. And I think from a pure economical perspective and trading perspective, I think most people would probably wish to just rejoin the European day ahead coupling, but that's blocked by political matters.
Okay, that's quite a political hot potato. But Daniel, if I can turn to you, it's not all been bad news, has it? I mean, Brexit has allowed, especially you guys who developed the platform or empire, to get the freedom to develop in the way that you wanted.
Yes, that's correct. So previously, during whilst the UK was part of the EU, every single allocation had to happen on one single platform called JAO, the Joint Allocation Office. And by obviously the UK leaving Brexit, this freed up BritNed and other interconnectors to leave JAO and build their own platforms, such as we did with Empire. And to connect back to what Nils has said, obviously interconnectors losing out on the implicit day-ahead and intraday allocations means that now intraday products are a little bit all over the place. And by BritNed going to their own platform, this will allow the freedom for BritNed to offer, for example, even 24 individual intraday products, which is going to help significantly to stabilize the grid and obviously offer a larger flexibility for market participants and TSOs to counteract some of the changes which is occurring right now due to the renewables and everything else that's going on.
Exactly. How have your customers reacted?
I think overwhelmingly the feedback was very positive. It's obviously a very new customer-centric platform where long-term day and intraday allocation and nomination is all happening under one roof. So that's definitely positive. There was, of course, some resistance to change, which is to be expected. But overall, I think every single market participant is happy with the new offering. And BritNed is going to roll out new products to the market, first time ever, in a couple of weeks. So again, we are really interested to see how the uptake of that is going to happen.
Nils, if I can then turn to you and more about the general regulatory environment. I mean, it's all a bit messy. I mean, we've just had, in the week where we're recording, there's been a cabinet reshuffle. Obviously, there wasn't a change in the industry minister in the UK, but there have been a few over the past few years. There's been policy U-turns, basically rolling back some of the green policies that were key for the government here. What does that do to your commercial operations? How can you operate in this kind of very uncertain context, rather, I should say?
Yeah, I think that's a good point. I think what we have seen after Brexit was a bit of an empty space in terms of the regulatory framework. Some of the European market codes were pulled over as statutory instruments into UK law, but not all, and for some of them also only parts of it. So it was actually not easy as an interconnector operating between the two frameworks, finding out what is now applicable and what is actually now the rule to follow. So that has been challenging for us. I think we kind of took at some point the position that we make most out of it, really do what is possible in terms of what is best for the trading setups, what is actually good for our customers, and therefore operate in a way until somebody kind of holds us back or a regulation holds us back. And that has worked out well so far.
So you're almost kind of proceeding ahead in spite of the policy environment rather than because of?
Yes, because I think we do obviously have a vital interest or a general interest in offering the best trading solution. I think this should be also in line with what our governments want, what the traders want. So therefore, we indeed just basically try to step a bit ahead of it and not necessarily always wait until all regulation has been fallen into place. And obviously, we are part of the discussion on the regulation as well. So we're trying to make sure, of course, that it is still in line with it. And otherwise, we will need to fine-tune our setups. But overall, I think that's currently the case. I think what concerns us a little bit at the moment is more on the emission schemes. We obviously have a UK ETS and we have a European ETS. And what concerns us is now the carbon adjustment mechanism that has been basically set up just by the European Union. And this could have actually detrimental impacts on interconnector trades because it might mean that additional charges would be applied to interconnector imports and exports, which would then mean it basically kind of lowers the spread, makes it less viable to trade across borders. And that is, of course, something that we would hope that it could be avoided because it simply cannot be good for social welfare.
Talk us through that sort of calculation there. How does it impact the technicalities of trading on those cables?
We're also still in the position or in the situation where we're trying to exactly figure out how CBAM or the carbon adjustment mechanism should be applied. How we understand it could be that you basically have to integrate a bit of an additional price step into your spread calculation between the two markets, simply to pay the levies, pay the tax for the carbon emissions, if it is deemed to be different between the UK and the EU. And in that case, let's say you have a euro price spread between the UK price and the Dutch price or European price. It might mean that you have to pay 20-cent carbon tax, which means actually your spread is only 80 cents. And that is okay if it's €1 and it's 80 cents left, but it's not okay if it's 20 cents and it's nothing left. So therefore, there would be no flow anymore, and actually a viable trade that it should actually happen to support each other's network and also to just generally make use of the price difference would not happen anymore because it's kind of eaten up by the tax.
So if you look back at sort of historic prices over the last sort of year or so, how often would have that resulted in no flows?
I think especially now, and especially after the whole gas crisis in Ukraine, it would have happened more often. I think we have seen, especially last year and this year, a lot more volatile flows. So where the years before we have been pretty steadily flowing into the UK with quite a clear price difference towards the UK. This has kind of flipped multiple times now, and it does flip multiple times during the day, every day now. And the price differences are not that clear anymore. So you will have this situation way more often. Currently, we also see negative day-ahead prices in the Netherlands, basically caused mostly by an overshoot of solar input. So that kind of would trigger the situation more often, that you would actually create no flow or have such an uncertainty in the market, especially with the missing implicit trading solutions, that you would just not find a trader who is willing to basically schedule a flow like that.
But in terms of the platform itself, Daniel, that's robust enough to deal with these incredibly complex markets where you've got negative prices in one market, lower in the other.
Yes, that's correct. So the platform itself is flexible enough to deal with, I think, pretty much anything that BritNed throws at us in the future to create new products and obviously counteract any kind of market volatility and try and keep the flow and generate the interconnection between the UK and the Netherlands flowing and up and running.
But if I understand you correctly, Nils, there could be situations where people just decide I'm not going to trade on the interconnector at all.
That could happen. And I think for some reason or for the reason that we would like to be ready for any kind of circumstances going forward, we have also created this new platform because there is sufficient flexibility to offer different types of products that might overcome some of these issues. But yes, absolutely. I think with the challenges that the carbon adjustment mechanism brings and the current volatility of the market and the lack of implicit trading solutions currently on the UK interconnectors, that is absolutely in the realm of possibilities.
So it's not, in a way, just the carbon border adjustment mechanism. It's also it's more that than the ETS. The ETS price is there, or the combination of the two, or the three.
Yeah, absolutely. It's a sum of things, really. It's like where you had a very clear steer when you were part of the day-ahead market coupling. It was algorithm-based trading. Every cent was utilized in terms of price spreads. Then even with a carbon adjustment mechanism, you would have a clear steer if there is, let's stick with the example of 20 cents tax. If there would be a 21 cent price difference, it would schedule a flow. But a human being, a trader, would not schedule a flow for a cent. And so it basically adds up. So all these kind of different aspects of the trading setup will make it, or are making it, more complicated.
You know, in some countries, more and more I'm hearing around the concept of interconnectors that it's very problematic. I mean, it's politically very difficult, especially in areas that have historically low prices. So the connector will then raise prices in those markets. What do you say to the people that are very skeptical about the role of interconnectors? I know you have a very, very clear stake in this, Nils and Daniel, but what would you say to the skeptics out there that, you know, there's a political movement as well in many countries, specifically in the Nordics, that don't want cables. They want to keep low prices in their own markets.
Understandable. I think, however, that is looking at the current price setups, at the current market setups. I think we've all decided, or most of us have decided, to be in one economic zone, to actually kind of compete with the large economic forces around the globe, like the US, like India, like China. So therefore, I think it is key that also the whole economic zone of the European continent is actually getting access to cheap energy to be competitive, to actually not only in the energy market, but also wider than that, actually be competitive. And I think overall, it does create social welfare, even if it temporarily rises prices in some market, but overall it will decrease prices across the whole sector, and therefore it will also pay back in different aspects. It's I think too narrow to just look at a single market price and just fix it on that. There are wider aspects of this which need to be considered.
Absolutely. And the platform itself, Daniel, is that something that could potentially be rolled out for other cables or other markets, do you think?
Yes, absolutely. So the platform itself was built in a way thinking of this eventuality. And we are actually in conversation with multiple interconnectors connecting the UK to mainland Europe, who are also interested in obviously benefiting from the new offering and the platform that we have built for BritNed. When it comes to obviously flexibility, the offering to the customer, getting much and better data, which obviously when it comes to participants and traders is something which they desperately need to optimize their flow, their positions, and their general economical setups.
If I can talk a little bit, return to you, Nils, talk a little bit about, you mentioned negative prices, and that's obviously been, a major factor in the Netherlands with the rollout of solar specifically. And we've also had several instances in the UK in October. How can the interconnector help to sort of ease that kind of imbalance?
Yeah, I think you, Richard, I think you do need the interconnectors exactly for that purpose. I mean, we have different generation challenges across Europe. Just looking for a moment at the three big markets, UK, France, Germany, you have very different generation fleets. As we all know, France is heavily relying on nuclear, had its challenges last summer with the kind of droughts in the rivers for cooling and so on. So it had a substantial part of the nuclear fleet out of operation. We have Germany, which has kind of maybe too fast moved out of all the carbon generation more or less and kind of very heavily relying already on renewables. And now with the gas crisis have seen a setback in that. And we have the UK, which is, I think, generally quite a good mix still, but has a generation problem in itself. So generally too low amounts of generation often. And I think the answer to that is basically sufficient interconnection, because if you combine the three markets, then you probably have the ideal generation mix. But if you see them in isolation, you don't. And therefore, you do need the interconnections to actually help each other out in the situation where one of the generation types is not performing, but another one is. And I think if you extend that view across Europe, you see that even more. You have hydro in the Nordics, you have large solar in the south. Spain is huge in solar in the meantime. And you do need the interconnection for that to actually, in a best way, utilize your energy sources.
It's going to get more complex, potentially with more instances of negative prices. I mean, we're going into the winter where that maybe isn't such a huge issue, except on very windy days of low demand. But there are plans to roll out energy islands and offshore park. Where does that place the role of cables? I mean, they obviously are a central part of bringing that power to these markets, right?
Yeah, it absolutely is. I think there are a lot of interesting questions around these kind of energy islands. I think one of them would be, in which bidding zone do they actually fall? Will they be their own bidding zone and have their own prices, or will they be allocated to one of the countries connected to it? That will obviously impact how it will play out for the rest of the ecosystem there. And I think also there's a lot of questions still how, for example, the wind connectors that would connect two countries but also offshore generation, how would they function? How would they actually be integrated into the market? I do still think that if we want to see in the future a North Sea offshore network, which most TSOs are working on and are striving towards, then I think there's definitely room for both. I think you will need the point-to-point connections with established market setups, and you will need the energy islands, which are probably heavily boosted by that time by wind generation. Also for the reason that you mentioned before, Richard, it might not always be the right day for the wind, but you still want to see the power flows. And I think the more interconnection, the better for our energy landscape at the moment, and with the vast integration of renewables.
But in a way, I can see why you'd say that, Nils, being a representative of a interconnecting a company or a cable, of course. But if, Daniel, the platform itself can deal with this level of complexity, right, with more added offshore wind parks, more flows actually being changing on an hourly, maybe on a minute by minute basis. I mean, this is perfectly doable.
Yes, that's correct. So we actually had multiple conversations with Nils about the upcoming multi-purpose interconnector between the Netherlands and the UK, and see how we could maybe repurpose this platform to cater for such a complex flow, when obviously you have a generation in the middle and you need to decide where to flow it, and obviously it's acting as both a interconnector for the participants and also as a transfer vessel for the power generated by the wind. So it's something which we have had conversations, and definitely we could repurpose it in a way to even cater for, I'm not sure about minute-to-minute flow. Like, yes, the technology could do it from a digital perspective, but I don't know if the actual control system is able to change directions that quick.
Absolutely. Gentlemen, thank you very much for a very interesting and lively conversation. I think it's absolutely clear that if we are to meet our net zero targets, to decarbonise in the way that we want to, both in the UK and in Europe, we have to focus on the cables and bringing the power to where it's needed. So thank you very much for joining the Montel Weekly podcast.
Thank you very much for having us. Thank you.